Markkula Center for Applied Ethics at Santa Clara University. My name is Jim O'Toole, and I'm a senior fellow here. And the topic of discussion today is securities fraud in China, and in particularly Chinese stocks being sold on U.S. markets. We have probably the one person in the world who really understands what's going on in this subject. We're really lucky to have him with us today. His name is Carson Block, and he has a wealth of experience, even though he's a very, very young man. And we're going to get right to his story right now. The name of your company is Muddywaters. I always thought that was the name of a blues singer, but I gather it also is the name of a company. Now, could you tell us a little bit why you chose that title, and what does your company do?
Yeah, well, we get confused for being blues fans all the time, and unfortunately we're not. But we took it from a Chinese proverb that translated is "muddy waters makes it easy to catch fish." And basically the idea is that behind the proverb is that by creating opacity, one can make money. And so we started our company, we started our business focusing on Chinese companies listed in the US, and we realized that there were a lot of companies that were committing fraud and defrauding US investors. So they were creating and taking advantage of opacity in order to make money for themselves. So the idea was, our name was basically, to convey the idea that we understand how to navigate muddy waters, and we can punch through the opacity and show investors what the actual reality of these companies are.
Could you give us a couple of examples of the kinds of fraud that these companies are committing?
Sure. Well, the one that we're best known for was actually a company that was listed in Canada, but company is called Sinoforced, and the reason why we're best known for that is that it had market cap of about $6 billion when we exposed it as a fraud, and it had $2 to $3 billion in debt outstanding as well. So this was a massive scam, and the company was constantly financing and sucking in more money from investors. And so the reality of this company is that the actual revenue was a tiny fraction of what it claimed. And we don't know what it really is. We just know that significant portions of what it claimed to generate were just not there. So it claims to have a number of suppliers, and we researched those suppliers. So there were 5 or 6 main suppliers that were purportedly selling $200 to $300 million worth of timber to Sinoforced per year. We researched those suppliers and saw that they were largely fictitious. There was one real supplier, but the actual volume of timber that this supplier sold to Sinoforced was 1/15 of what Sinoforced had claimed to buy.
So they were just making all of this up, but they have to list this with Toronto regulators. So they just, in effect, they lied to the Toronto regulators?
Yeah, the financial statements were completely fictitious. And we've seen that with a number of other companies. We've also exposed 2 companies that have what I consider to be real businesses, but that are committing fraud. So if you are in China, if you're a US listed Chinese company that is a real business that's committing fraud, you're making up maybe 30% of your revenue and a significant portion of your profits. Those would be fictitious. But in the world of China frauds, that's actually not really that bad of a percentage. Most of the companies that we've exposed as frauds, or others that we've researched and we haven't written on, the real revenue was maybe 1 to 5% of what these companies were reporting in their U.S. financials.
But I gather you make some money out of this, and how do you profit from your activities?
So the model, it's not without controversy, but what we do is once we have conviction that something is a fraud and we know that we'll be publishing a report on it, we go and we sell short the company's stock, and then we release a report. Now, of course, we disclose prominently on the front page of the report that we are short the stock. But if the market thinks the information that we've put out is high quality and investors agree with our analysis, they sell the stock and then we make money. If they do not think it's high quality information, then they do not sell the stock and we don't make money.
Have you ever made a mistake with any of these companies, so that actually they were good companies and you accused them of fraud wrongly?
Well, there are companies that we've published on where we haven't ultimately, quote, won, in that these companies, they were eventually, there's one company that was acquired at a higher price than the price of which where it was when we published on it. And there's another company that's trading for more than it was at the time that we published on it. So those are not mistakes. Those are frauds. Those are actually the two companies that have the real businesses, but where they are committing fraud. It just goes to show that, especially in today's environment where investors are so desperate for growth stories, they're really willing, to stick their heads in the sand to a significant extent when it comes to companies in China that are purporting to be high flyer, rapid growth companies.
At the end of this, do you make your research available to the public and to government regulators?
So yeah, our model is to release our research to the public. You can subscribe, but it's free. You just so if you put your email address in our database, then when we release a report, you'll receive the report. The reports are downloadable from our website. The regulators certainly do access them, and in almost every case when we've published on a company, we have proactively contacted the regulators and said, hey, please take a look at this. This company is a fraud. Here's our report. Happy to come in and speak with you about it.
A couple of months ago, we had some financial analysts here at the Markkula Center, and these people were known for being real risk takers. But when they started to talk about the potential IPO of Alibaba, they said, no, we're not going to touch that. And I said, well, look, the company's a good company. Jack Ma is an articulate guy. He seems very thoughtful. If there's ever been a company that looks attractive coming out of China, it's really Alibaba. But you won't invest in it. And they said, no. So what you have to understand is that the entire business system and financial system in China is not transparent, and we don't think it's worth taking the risk. Do you agree with that? Do you think that's sound advice?
Yeah, I think so. And where investors get burned, or sometimes are rewarded, but often it ends in tears. It ultimately ends in tears when something is too good to be true. And in the case of China, a lot of these companies, that's really the first sign, is they are too good to be true. Now, I'm not saying that's the case with Alibaba. That is a real business. But it's a huge company. The disclosures in the prospectus are opaque. I do wonder why Alibaba, with this great business that generates lots of free cash flow, I do wonder why it feels compelled to raise $20 billion. But look, I don't see it being, it's unlikely that we would ever really look at that company and conclude it's a fraud. It is, as far as I can tell, substantially a real business.
You're just reading between the lines of what you're saying. So it might seem that the Chinese have spotted a moral flaw in American investors. They seem to assume that we are so greedy, so after a quick and easy buck, that we'll believe anything and that we'll throw money at them if they make the wildest claims. So is a little bit of this our fault too?
Yeah, there are faults on both sides. Obviously, if somebody's committing fraud, they are definitely the ones most responsible. But I think to some extent, investors also need to take responsibility, and most investors cannot do the type of work necessary. You can't go to China and sample the business yourself or really understand what's going on there. A lot of investors do rely on investment banks, and they'll say, well, you have these analysts covering the company. But what investors, unfortunately, in many cases don't get is that those analysts are usually not really, they're not incentivized to not put strong buys on companies.
Carson, that was an absolutely incredible story, and I think we've all learned a tremendous amount from your willingness to share your experiences with us. Please keep up the good work. Thanks.